All right, welcome. Today we are diving into one of the most exciting ideas in all of finance, bringing real-world assets on-chain. Now, when we say on-chain, what are we really talking about? It's just a way of saying we're recording something on a shared, transparent digital ledger, a blockchain. The whole idea is to take real, tangible value from the world all around us and put it directly onto this new digital foundation. Now, really, just stop and think about that for a second. What if you, yes, you, could own a tiny slice of a massive skyscraper, a piece of prime real estate that, until now, was pretty much only accessible to the super rich? And look, this isn't some sci-fi fantasy. It's the core promise of putting real-world assets on-chain. Well, that is the promise of what we call tokenization. We're talking about taking these huge, traditionally slow-moving assets. I mean, trillions of dollars are locked up in things like real estate, government debt, even fine art, and making them fast, efficient, and easy to trade. Imagine trading a piece of a building as easily as you buy a share of stock, or investing in gold without ever needing to worry about a vault. This tech completely flips the script on who gets to invest and how it all works. Okay, so we've got the what if down, which is awesome. But how? How in the world do you take a physical skyscraper or a government bond and turn it into something digital that you can trade on a blockchain? Let's get into the mechanics. Well, it's not magic. It's actually a pretty structured 5-step process. First, you've got to identify and verify the asset. Second, you create a legal structure to connect it to the digital world. Third, you mint the digital tokens that represent ownership. Step 4 is where the magic really happens. A smart contract gets programmed. And you can think of a smart contract like a super smart vending machine. It automatically enforces the rules, like paying out rental income or interest, with no middleman needed. And finally, those tokens can be bought and sold on marketplaces. So yeah, if you want the textbook definition, that's what tokenization is. It's just the process of converting ownership rights of a real-world asset into a digital token. Each little token is like a digital certificate of ownership, a verifiable stake in the real thing, all recorded transparently on a blockchain. All right, so now that we've got the how sorted out, let's look at what happens when this theory actually hits the road. This is where we get to see finance, completely remixed for the on-chain world. And wow, this slide really lays it all out, doesn't it? Just look at real estate. Traditionally, it's super illiquid, which is a fancy word for hard to sell quickly. It has a massive entry cost and comes with mountains of paperwork. Now flip that. The tokenized version, it's liquid. The records are automated, and because of fractional ownership, you don't need millions to invest. Think about it. A $100 million building gets broken down into 1 million tokens. Suddenly, you could own a piece of it for just $100. That's a game changer. Okay, let's switch gears for a second and talk about another huge market, bonds. So what's a bond anyway? Super simple. It's basically a loan. You, the investor, lend money to a government or a big company, and in return, they promise to pay you back with regular interest payments. It's a fundamental building block of finance. All right, you got that? A bond is a loan. Now, let's take that whole idea and put it on the blockchain. What do you think happens when this old-school bedrock financial tool meets this brand new tech? The difference is, well, it's huge, and it's immediate. Settlements that used to take days, now they happen in seconds. Every single transaction is recorded on that public ledger, so you get full transparency. And those interest payments, forget waiting for a check. That smart contract we mentioned, it just zaps the money right into your digital wallet, automatically. And just like that, this massive market becomes accessible to investors all over the globe. Okay, but let's be real for a minute. This amazing future isn't just going to appear overnight. This is a pretty revolutionary idea, and like any big change, there are some serious hurdles to clear before it goes mainstream. Really, the roadblocks boil down to 3 big things. First, you've got regulation. The rules of the road are still being written, and that creates uncertainty. Then there's custody. I mean, who's making sure that the fancy skyscraper backing your token is, actually there and safe? That's a big trust issue. And finally, you can't ignore the technology risk. One little bug in a smart contract could be a total disaster. But even with those challenges, the end goal, the vision here, is just so compelling. We're talking about a future where big institutions are all in on this, where investment opportunities are truly global. The big picture goal is to create this unified financial system where you get the stability of traditional finance blended with the speed and efficiency of decentralized finance, the best of both worlds.
This quote really just hits the nail on the head. Just think about that. The idea that real estate, which for centuries has been this super exclusive, elite investment, could become something anyone can access as a digital asset? That's huge. It's genuinely revolutionary. And all of this leaves us with one really big question to chew on. If we can actually break down all these old barriers, cost, geography, complexity, are we standing at the dawn of a truly democratized financial world? That's the promise, and it's a powerful one. Thanks for diving in with me.